Hi, I'm Victor. In this video, I'm going to cover a technology company by the name of Xperi. This is a small company that most people haven't heard of, but I did find them a couple years ago, and I've been investing in this company. There's three things I look for in an investment. And first, I want to know that I'm getting a discount on the stock price, so that way I can get nice appreciation on my investment. I want to know that the company is operated and performing well. So good leadership, good operations, good performance. And I want to know that it's a good time to buy. So let me take Xperi through that scorecard and tell you what I think of this company and why I'm an investor. So companies that want to stream video, music, content, and so forth, they license technology from Xperi. And you think about it, it makes sense, right? Like companies that need software, they usually buy the software, it's prepackaged, and then they use it because that may not be their core competency. Let's say Ford, they make cars, so they're not going to go start writing software just because they want to do it themselves. And the same thing goes for video streaming. The studios and so forth, they want to create great movies or create great TV shows. Then they just license Xperi's intellectual property. Then they can stream. So they have partnerships with some of the biggest streamers. One of the biggest new partnerships was with Micron, the semiconductor company. So their intellectual property will be on those chips so that when Micron devices are used, it could have the Xperi intellectual property. The connected car is another category where they're in, and our cars are now becoming supercomputers, right? So, Xperi is in that space. They played quite well in the cable TV space, which is going away, but it's being replaced by the new generation of streaming televisions, connected cars and devices and so forth. And then last is, the paid TV. That is a space that's growing really fast. Xperi has customers like Google for Google TV. So they're in a space that I believe is a good space to be in. And they're not a brand that people recognize because they're pretty much integrated into a product that is being sold to the customer under a different name, like a Google or a Ford or some other brand title is what the customer is paying for, but they're buying the Xperi technology along with that product. So Xperi had their earnings call yesterday, and I liked what I saw. First, top line growth was 16%, which was excellent, and their free cash flow was very good, and they're in line with the free cash flow that I'm expecting. They also guided well. They're guiding for about 6% growth on the top line for the whole year, 2022. They also are guiding for good operating cash flow in line with what I'm expecting. Xperi over the last 5 years hasn't performed all that well. They're down 53%. And I think it's a combination of, COVID hit, which hit everybody, but it's just an unrecognized name. I was attracted to the stock because of their free cash flows and that, hey, their proposition makes sense to me. It's almost like a technology company that sells to these really successful companies, and they don't have to manufacture anything. They just really benefit from or get revenue from their intellectual property, which is very profitable. So I might be one of the few that believe that's a strong business, and I'm an investor, long-term investor, looking for the rest of the market to realize that this is an undervalued company that should go up, and or Xperi gets acquired, because it would make sense for a larger technology company to acquire Xperi and take on this really nice revenue growth, free cash flow, profitability. Year to date, they're down 18%, but the S&P index is down 14% year to date. So not the worst stock in the market right now. They did announce their earnings, and initially they were up 1%, and now they're down 1%. So the market has some mixed feelings over it, but we'll see how things play out. I believe the Xperi stock is discounted by 66% currently. Let me tell you how I got to that conclusion. I like to look at free cash flows that a company is going to produce over the next 20 years, discount them by a good discount rate. That way I know as an investor, hey, I'm going to get this type of cash flow out of this investment over time. And here's what I came up with. So I used their last full year free cash flow, which is 221 million. Nice high discount rate, making it a nice conservative investment of 9%. I'm going to grow free cash flows in years 1 through 5 at 8%, which is consistent with what they're performing at, and then long-term growth of 4%. Taking those into account, growing the free cash flows over time, the intrinsic value of the company, taking the net present value of all those free cash flows, ends up being about $3 billion, but the market cap of the company is only $1.6 billion. So there's a nice discount, in my opinion. On a per share basis, the value per share is $29 per share, but the stock price currently is at $17.49. So that's why I'm a buyer and a holder of Xperi, and will continue to buy shares going forward. So XPER performance has been really good. Last 4 years, they've grown at 29%. If you look at their most previous quarter, which was reported yesterday, they grew that quarter at 16% compared to the year prior. Free cash flow is excellent at 221 million, and their free cash flow yield is 14%. Awesome. Good cash balance on their balance sheet. Revenue, they're guiding to grow from 4 to 8%. I'm taking the midway point on that. And cash flows to be consistent with 2021. Their paid for TV is really growing fast. Makes complete sense. You see a lot of people cutting the cable and beginning to stream, paid for TV. And the Micron deal is already, generating revenue in their current, income statement. My outlook is they're going to grow 8% over 5 years, and then longer term growth of 4% after that. They have a low cost of sales, which I really like, so it makes them profitable, and they generate a lot of free cash. I like that about them, and I think the stock's going to appreciate over the next 5 to 10 years. And these guys are, I think, a really good takeover or acquisition target to another larger company. So Xperi has a really good scorecard. As mentioned, I want a discount on the investment. They definitely give you that discount. It's a company that's operating, performing well, and that Micron deal is an example of that. They're forming really good partnerships so that they have a really good long-term growth plan and a really profitable business. And it is a very good time to buy. As I saw the stock chart, the stock price has been going down, but the performance of this company has been really solid. So really good time to buy, and I'm going to be buying more shares of Xperi for my portfolio. So this video is for entertainment purposes only. I'm not a professional advisor. I'm an investor in Xperi, and I like to share my experience. Hope you found it interesting. Thank you for watching this video. Really appreciate it. If you like the content and would like to see more, consider subscribing to my channel. Hit that bell to be notified when I release a new video. And if you can do me a favor and like the video, I'd appreciate that. It helps the algorithm and for other people to find this video. Thanks again for watching, and good luck investing in 2022.